Going to LIC Housing, the positive is this is a housing finance company, and the quarter gone by was very tough. We saw that even in the mighty HDFC numbers. So considering that, I think LIC Housing posted a fairly stable quarter. Asset quality, yes, a little hiccup, but otherwise it's a stable number for what was a very difficult quarter. Vinay Shah, the Managing Director and CEO, has joined in to explain more about the numbers. Good morning, Mr. Shah. Interest income in the quarter has grown slower than interest cost if you looked at it on a quarter-on-quarter basis. Can you give us a sense what happened to the margins?
Yeah, the NIMs for the quarter were 2.33%. The last year was 1.92%, corresponding Q3 FY18. Going forward, we would like to improve upon this, but as you know, NIM depends on your overall income profits and your whatever is the size of your portfolio. So the portfolio growth has been very good. For Q3, we grew at about 16.34%, which is one of the best in the last 8-10 quarters. But now, because the portfolio comes in the denominator, the average portfolio also, this is high, so average portfolio is high. So that is something which the reason can be assigned to the dip in NIM as compared to 30th September, 2.35%.
Yeah, actually I was going to ask you next about the loan growth. Where exactly has it come from? As you say, it's good. Is it individual loans or more developer loans?
The individual side, if I see the interest income growth from individual side, that growth is in the ratio of about 20%. And the developer side, the growth rate is 90%, but the share is only 300 crores. So overall, interest income, we are showing a growth rate of about 23%.
What about the AUM growth? What has it been in Q3, year-on-year and quarter-on-quarter, and what's the outlook now?
AUM we calculate as at the end of the quarter. So the total portfolio has grown up by 16.34%. As I said before, it has gone up to 1,81,000 odd crores as against 1,56,000. In this also, the retail portfolio has grown by about 14%. Both these percentages are one of the best in the last so many quarters.
Can you give us a little more sense of what's happening with asset quality, gross NPA, net NPA, and have you seen higher slippages in this quarter?
The GNPA has increased slightly. It has gone up from 1.20% to 1.26%. The net NPA has gone up from 0.81% to 0.93%. There have been no major slippages in Q3.
Okay. How is your liquidity position, Mr. Shah? Did you securitize or did you assign? That is, did you sell any assets?
We did not experience, in fact, any problem pertaining to liquidity, availability of money, I would say, in Q3. The only concern for us was the rates at which money was available, and because of that, our cost of borrowing went up by about 15 basis points in Q3. Securitization we have not done.
Got that. How has your provisioning moved? I mean, in terms of credit cost?
Overall, our cost of funds, if we see, is currently cumulative cost would be about 8.45%, and our average yield on portfolio would be about 10.45%. The average spread is about 2%. Yeah.
Okay. What about your view on rates itself? I mean, do you see interest rates softening anytime soon?
I would not like to comment on what the RBI is going to do, but considering a scenario where the rates soften going forward, then probably if it affects our interest income, it will also give us some relief as far as the borrowing cost is concerned. So that balances out.
Okay, can you give us the rating mix of your developer exposures? How many are AAA? How many are below A?
See, developers, what I can share with you that currently we are servicing about 260 accounts. The developer book that we are having currently is 11,000 odd crores. Q3, as I said before, we did not have any major slippages. We constantly review, contact, discuss with the builders, and going ahead Q4 also, I don't see any big accounts going into default or NPA. We have not seen stress as far as repayments from developers coming to us are there in Q3.
All right, Mr. thanks a lot for joining us. That's LIC Housing, but we need to shift focus back on the market. Not perhaps entirely unexpected, the mid-cap index is already in the red. The Nifty's gap up has been sold into a bit, now up only 34 points. And ICICI Bank is actually at the low point of the day, though still up about 1.8%. But if you bought ICICI on the gap up, today you would have actually made loss. So that area move also was compensating for that stock move yesterday and previous day. But let's see if from this level, it's not too weak as well. It's somehow holding that 372 mark. Ashwani is back with us. So is Mitesh. Rajat Bose also joins us. Ashwani slipped off a bit from the high point. I think you were talking about a contra short at the open. Is that trade still on, or is there a different trade now? And your thoughts on individual stocks and ICICI Bank, of course.
So you don't, buy stuff post results after a 100 rupee rally and expect to make money. So that wasn't a great trade. As far as the market is concerned, it's very clear that the kind of momentum, the kind of, buying that is visible, you can't take out serious resistances from here. Even now you should get short. As I said earlier, I am expecting 10,500, 540. If you got hardly 40 points after this sort of global news and local news, etc., then I think the market is clearly telling you there is more downside before there is upside. And once all this budget, etc., is out of the way, I think market should get there. That will be a logical target from where you can have your 200, 250 point rally. So that way the opening has failed. So having said that, individual stocks, India Bull Housing is a sell with a stop of 670, target of 640. Z after 3 upside days is now again showing weakness. So that's a sell with a stop of 385, target of 370. And Tech Mahindra is a buy with a stop of 74, target of 724, target of 750.
Okay, well, that's the word coming in on a couple of these stocks, Tech Mahindra in the green. By the way, wanted to mention that DHFL is now down almost 10%, and 1.5 crore shares are traded on the downside for DHFL, not looking good, and Z Entertainment as well as in the red. Mitesh, wanted your thoughts on some of these, troubled stocks. Any fresh short calls here on Z or on DHFL? And if not, any other stocks that you're looking at this morning?
See, I think for DHFL, the chart structure remains weak, but shorting at these levels after a big decline could always be tricky. So in that sense, I think I can avoid that. But Z, yes, Z has given a good bounce back, come to some kind of resistance levels. The moving averages area around the 390 mark, and today's high was 391. So I think anything close to about 384, 385 should invite some shorts with a stop at 393. And I think the stock can possibly decline a bit more to about 355, 350 zones again. That apart, I have 2 buy calls. Infosys on the intraday charts is gaining some strength. So keep a stop at 720, look for targets of 754. And Lupin is a buy. It's a conditional buy. Once it crosses levels of 875, go for a long position there. Keep a stop at about 860 and look for 895 as your target.
Okay, thanks for that, Mitesh. And Rajat, good morning to you. I see that you are having a sell on DHFL. That stock is already down 8%.
Yeah, when I actually gave the short call to your guest coordinators, it was 151. And right from yesterday, I have been mentioning this target level of 142. 142 to about 140 is a major support area. So I kept a target of 142.10. And 145, the first target could well be met just right now or something. But the point that I would like to mention is that there would be, I'm expecting some kind of a bounce back from 142, 140 kind of support area. But this will just be a pullback bounce. And if DHFL were to decisively break 142, 140 support area, then it could actually lead to a much sharper decline even from here. People would actually snowball into panic, and then stocks that are weak in this segment, that is India Bulls, Housing Finance and other stocks, might well fall. And even I did not like the body language of LIC Housing Finance person. So chances are that that stock would also come in for some kind of selling. So housing finance stocks are in a weak territory, and it can still go down. But I'm still betting on 140 to 140 kind of range being met today. And State Bank is a buy. I mean, it's a pullback or whatever you call it. 297 to about 299.90 is the target range for the day, and put a stop loss below 287. Hiccup ID stock today could act as a savior. 322 is my stop loss. 331, 335. If 335 is taken out, then 337.5, 338 could well be reached. So these are the trading calls that I have. And overall, at higher levels, you expect selling till such time 10,732 to about 10,735 is decisively taken out.
Okay, well, thanks a lot for that. We'll keep coming back to you guys for more. In the meantime, we also have a couple of big numbers that we're expecting today. After Bajaj Auto's week showing, Hero MotoCorp will come out with their numbers. Of course, the numbers are expected at 5:30 p.m. in the evening, so we'll react to them tomorrow. But the numbers are expected to be tepid. Remember, the stock is down 15% in January. It's down 30% in the last 12 months. That's because the demand has been quite weak for the sector on the whole. The cost of ownership has gone up because of higher insurance costs, higher fuel prices, etc. Discounts are at record high, and all of that will put pressure on the volumes as well as on the margins. A second consecutive quarter of low single-digit volume growth, just 5% volume growth this time versus 5.5% last quarter. This compares to, on an average, about 15 to 20% volume growth for the preceding 15 quarters. The margins will decline as well because of weak operating leverage and high discounts, but also expiry of the tax benefits at the Haridwar plant will hit the margins this time, and they had some higher launch-related expenses too. So overall, revenue growth of just 6%, EBITDA down 3.7%, and profits are down 6%. What I also want to know from the management is what they plan to do with market share, because year to date, they've seen some market share loss in the scooter segment, and that's a cause of concern.
Okay, what did you say the margins would be? Like Bajaj, you expect a margin hit here also?
Yes, Bajaj was down almost 400 basis points. It won't be as bad. We're expecting a margin fall of 160 basis points year on year at 14.3% versus 15.9% they did same time last year. Okay.
Well, to be fair, Bajaj after the fall is still doing about 15-16% margins. But yes, it's been a knock from the 20% that they were attempting. That will be Hero Moto, the numbers that you will have to watch out for. Now let's get to India Bulls Housing, the other nifty stock that's going to announce numbers. Abhishek, what's the street expecting?
Well, Lata, it may be a weak quarter for India Bulls Housing Finance, given the fact that liquidity crisis in Q3 has impacted HFCs, that is housing finance companies, and India Bulls Housing Finance has been no exception. So you can expect disbursement and AUM growth to slow down, and AUM growth, that is the loan growth for the housing finance company, can be in the range of 15 to 20%. On an average, we have seen over the last few quarters that it has been at north of 30% plus. The spreads can decline decline. They have been maintained at 3.2 to 3.25, but owing to the fact that the growth is on the lower side, coupled with the high cost of funds, the spreads can actually decline. Asset quality largely expected to remain stable. The gross NPA can be below 0.9%. Last quarter, it was at 0.77%. Due to IND-AS system of accountability, on a sequential basis, we expect NII to be down nearly 13%, while net profit can decline by nearly 9% quarter on quarter. Back to you.
All right. Thanks a lot for that. Those are the big numbers expected later today.
We promised Manisha Gupta is here with us to tell us what's happening in the world of commodities. Morning again, Manisha. First trades.
Thank you so much for that, Lata. Well, the crude oil prices, let's begin with that, because after that 2% gain in the overnight market, we are trading quite flat in the international space, and some profit taking is what we've started the Indian markets with. Well, it really has been the US weekly inventory data, where you have seen the build-up in crude inventories, but less than what the street was expecting. And there is a definite decline continuing for the product inventories like the gasoline, distillate, etc. And that has taken those prices on the higher side. In any case, when you look at the crude oil prices for the month of January, we are up by 19%. So it has been a strong start for the year. And we also are looking at now the sanctions on Venezuela, the Saudi trimming their exports to US. So that would tighten supplies going forward in US as well. And then, of course, it is the OPEC and the allies output cuts, which will also come in publication in the next week, the first week of Feb, that is. And the markets would be reacting to that as well. But the strength has continued non-stop in case of the precious metal prices, led by palladium, where the prices have been hitting record highs. We have the gold prices as well at 5-year highs in the Indian markets, inches away now from 33,000. In the spot markets, though, we already have crossed 33,000 for 10 grams there. Silver prices as well, trading at a 7-month highs. 40,000 is holding on to this one. Physical buying, ETF buying, the global concerns, weakness in US dollar, and of course the US Fed, more dovish than what the markets were earlier factoring in, all working in favor of the precious metal prices. The base metals, of course, have been very volatile, but we are closing this month positive for many of these metals as well, especially with the iron ore prices at 17-month highs. Copper is holding around its 1-month highs. Nickel is trading at a 3-month highs as well. And we have seen strong gains continue in case of zinc. Today, of course, it's slightly flat, while, of course, the Chinese PMI data was better than street expectation. It has been about the US and China trade talks, which conclude today. Much of the direction, of course, would come in from that. Trading strategies, we have them from Bonanza, and it's a couple of buy calls. In case of gold, they're looking at upside targets of 33,250. It is a buy in crude as well. Keep an eye on 3,910 as levels for the day today.